2018 was a roller coaster ride in the markets with big crops and the trade war dominating the headlines. So what's ahead for 2019? We brought in a panel of experts to provide some insight. Randy Martinson, Frayne Olson, and Luke Swenson. Thanks for joining us. And let's start off talking, first of all, about a trade war and the deal with China. Randy, do we get a deal by March 1st or not?
The fact that the administration likes tariffs, as they've come out and said, I don't think we will see a deal done.
Frayne?
I think we'll get a general outline. I don't think we're going to get a deal. There's a lot of very, very contentious issues. Agriculture is only one piece of that. I don't think we're going to have a formal deal, but I do think we'll have an outline enough to keep the momentum going on continued negotiations.
How about you, Luke?
I think we're going to make progress, but I don't think we're going to have anything more than just a general outline. They're still going to be using talking points. We're not expecting any billion-dollar purchase agreements or billion-bushel purchase agreements or anything carrying forward in that timeline.
We also have an acreage battle maybe going on here. A lot of talk about more corn acres, less soybean acres. What are your guys' thoughts about that?
I always make the argument when people bring up acreage battle to look at the flip side of it. You know, if they say corn's undervalued to beans, well, remember, we don't necessarily need corn to go up for the acreage battle to work. You just need beans to go down. And that's one I think we're paying a lot more attention to this year, where guys are going to be quicker, we think, to take advantage of, say, corn new crop prices because they're better now, and then hope beans can rally on any news of China or something in the future to try and offset that.
Frayne, what about acreage? We still have crop that's in the field yet, or had it in the field late.
I do think the market already has some of that shift already baked into it. So when we look at price relationships for November soybeans versus December corn, again, I think there's already a shift planned in there. The question is the shift enough? Right now, based on my math, we're looking at probably a 6 million acre cut in soybeans, probably a 3 million acre increase in corn. That's current expectation. So if we start seeing a bigger shift than that, one way or the other, I think prices will respond.
Randy, you think we'll get that many corn acres?
You know, I think we will get that many corn acres, especially, you know, up in the northern plains. We're going to see some switch out of that. But I think we might not see as many beans disappear because of the lack of field work being done this fall and the lack of, well, just how terrible our fall was. And I think some of the bankers are going to pull back on some of their budgets and make producers go to a little lesser cost crop to put in again.
So if we have a lot of uncertainty in the markets, which we can kind of bet on almost at this point in time, let's talk about your guys' marketing recommendations as we go into that for 19. First of all, I'm going to ask you, though, are you a bull or bear for 19? Randy?
Well, short term, I'm friendly to the markets. I think we got some opportunity to see a push. Long term, I'm a little bit bearish on the markets.
Frayne?
I would agree. I think there's going to be some short-term opportunities. Don't miss out on those. I don't think the rallies are going to come as big and as strong as a lot of people first expected. But take advantage of when they come. Long term, I am a bit concerned that we're going to continue to start building inventories.
And Luke?
I'll agree a little bit less optimistic on 2019 as we get into the year. I will make the statement. I'm a little more bullish on 18 corn, though, just because I think if we chew through some of this with increased demand as the year goes through, you could see a little bit of a pinch there. But yeah, 2019 new crop corn beans, we're not asking for a lot before we're kind of aggressively hedging more than the last few years.
And with that in mind, your marketing recommendations, Luke?
Right now, we've got a floor on 10% of corn for next year. We're going to be adding on to that pretty quick. We're bouncing around, you know, where we're sitting at the resistance level. If we can't get through it, we're probably just going to scale into it. Beans, we've been looking at doing some puts and calls, just kind of fencing yourselves in through crop insurance season.
And Frayne, with uncertainty, the more that we have you say, the shorter time horizon we have for marketing then.
Right. And again, the planning horizon, with the uncertainty, planning horizons get very, very short. And I think right now, farmers are focusing on their 2018 crops. I do think they need to be shifting and focusing a little bit more on the 2019 marketing and make sure that they get ahead of the game.
And Randy, we'll give you the last word.
But I'm looking at more of what the market can give us to see what our acres base are going to be going into this next year. I've got targets at 985 to start doing November beans, looking at 415 for December corn. Those levels start hit, then I want to start moving the product, be a little more aggressive in beans, maybe a little less on corn to start.